what's up? My name's John Nash. Thanks for checking out my YouTube channel. I'm a real estate agent here in the Bay Area and I want to get into some more longer form videos so we can really dive into some of the details about the news and happenings here in the Bay Area. We're going to kick it off with maybe a little drier topic, but a very relevant one. State Farm canceled writing new home policies in the state of California last Friday. And I think it's important to talk about why you should care as a potential home buyer or current homeowner regarding home insurance. So it's important to understand that the average home buyer in California does carry home insurance. All lenders are going to require it. So if you're financing on your property, you're not buying it all cash, they're going to require that you carry home insurance. Now, if you bought your property all cash, you could quote unquote self-insure, which would mean you would not carry home insurance, although that would be risky for the majority of the population. So a lot of companies have left California over the course of the last couple years with the concerns over wildfires and it just being too expensive for them and too risky for them to have policies in the state. There's obviously been a number of large wildfires that have taken out entire cities, and the cost to rebuild continues to rise. And so home insurance companies have just said, we've had enough. Now, despite all those companies leaving, State Farm has been active in California writing policies for the last couple of years, and they've kind of been the go-to for real estate agents in terms of referrals to clients. They wrote on almost all locations in California for primary residences, but that all changed on Friday. So with State Farm pulling out of California last Friday, it left agents and home buyers in limbo as they had to go find a new insurer for their home. I have a couple clients who are currently in contract with no contingencies, so we're running around talking to different brokers, seeing what type of options they could find. And the reality is that prices have gone up probably 50% since State Farm pulled out because State Farm was such a large player in the insurance game that they did typically offer lower prices than a lot of these smaller competitors who, quite frankly, the risk for them taking on new insurance policies is a little bit greater due to their volume. So obviously, I'm not an expert in insurance and I don't pretend to be. I leave that to the insurance experts, but we should focus on what this means from a residential real estate perspective and how this changes things moving forward. If I'm a buyer writing on a property, I am going to be investigating my home insurance before I write an offer because it's not a guarantee that you are going to be able to get a reasonable rate to insure your home here in the near future. Now, it's important to remember that home insurance is a luxury. It's a commodity, and they are a business as well. So from their standpoint, if the numbers don't make sense, the insurers aren't going to be writing policies. So we have to do our research to see what type of policies you're going to have access to. And it can be very neighborhood dependent, depending on how the policy writer views the risk in that neighborhood. So just because you can get insurance in Moraga, California, doesn't necessarily mean you're going to be able to get insurance in Tahoe. It's not apples and oranges. So moving forward, we'll see how this changes the landscape in insurance in California. State Farm has left before and come back, but we haven't seen any other companies return recently. So it may be that for the next year plus, we are kind of scrambling here on the home insurance front. Make sure you continue to check out the latest videos on my YouTube channel. Please like this video, subscribe. I appreciate you all watching and look forward to seeing you on the next one.